Hello, 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 hello. Good morning, everyone. Happy Monday morning. How is everyone doing today? Let's see. Fantastic. Starting off with the fantastic news. U.S. may send troops to Ukraine. Oh, geez. Marching towards World War III, aren't we? Good morning, Sterling. Good morning, Patrick. You got to start off with a funny thing for the first thing in the news. Here's a fun. You should have started off with this. Elon Musk calls for Warren Buffett to take a stake in Tesla. Now that's funny. That is funny. If you start off with that, all right. So, I really appreciate you putting in the news whenever you are here, Sterling. I really appreciate it. Uh, yeah, we got more troop stuff. If we can't let Ukraine fall, because if it does, there's a significant likelihood that America will have to get into the conflict. Aren't we already in the conflict? Because where are we sending money and weapons to? We just don't have technically ground troops. Well, I bet you we have a lot of advisors there, so we're already in the conflict. Oh boy. All right. Well, I got to skip some of this stuff because we got Robin Hood got a Wells notice on the 4th. So, well, they got the Wells notice. Never good when you get a Wells notice. Sink 7%. Everything tied to crypto is still. There's too much. I mean, we still cover the good old Bitcoin, but there's too much riffraff. Riffraff. We'll use the word riffraff on this Monday. There's too much riffraff. Already, I'm 6 espresso shots into it today. Well, there's a little bit left in this one. So you get to deal with 6 espresso shots, Mike. And it was chilly. It was 56 degrees out here at 4 a.m. for the dog walks. 56 degrees. What is that? Ah, what else do we have? Good morning, Jacob. Good morning, John. There we go. Continue to drive for World War III. Exactly. Martin Armstrong's economic turn date, his last 3, which were 9/11, GFC, and the launch of COVID. Is tomorrow the exact date? I used to follow some of this stuff years ago. I've not tuned into this stuff recently. Not to say that it's not valuable. I just haven't followed it as closely. What else we have? Good morning, Eric. Hello, Charles. Here's the funny thing that Biden, yeah. Good morning, everyone, Legion Reaver. Okay. 6 on the Monday is situation critical. 4 a.m. was early this morning. 4 a.m. was early, especially after Cinco de Mayo or Stinko de Mayo yesterday. All right, let's get to it. This is a very light week, but we got Fed speak. I didn't mean to make that rhyme, but it did. A very light economic week, but at least we got Fed speak. We got those 3 and 6 months bill auctions today. We got Barkin and Williams speaking, and we got a lot of Fed speak today. Tomorrow, again, Kashkari. There's just not much in economic releases, but we got the crude numbers on Wednesday. We got Jefferson speaking. We got Collins speaking. We got Cook speaking. Again, jobless claims Thursday, but other than that, just more 4-week and 8-week bill auctions. Friday, you got the preliminary numbers of. This is about the biggest thing all week. The preliminary numbers of the Michigan preliminary consumer sentiment and inflation. But we got Bowman speaking. We got Goolsby speaking. We got Barr speaking. So this is just a very light week. Now, let's just jump to even. We'll get back to the other stuff, but even here, it looks like it's a packed calendar with earnings, but not a lot that's really going to rock the markets. Nothing's going to shake. I mean, if you're in any of these stocks, yeah, please pay attention to earnings and know where your stops are, know where your profit targets is, and know where your profit targets are, or your profit target is. But you got Disney tomorrow, Palantir after the close today. Oh, Hims and Hers. Isn't the Hims CEO in big friggin' trouble for what he said? Am I thinking correct? I've seen a lot of stuff popping up on that. Uh, but I mean, what's really going to rock the markets? Nothing. Like Rivian's not going to rock the markets, although they got a what? They got a bailout 800 something million from the state of Illinois, which I'm so thankful I do not live in that state anymore. So we got that tie in. We got Shopify on Wednesday, but again, is Shopify going to move the markets? No, it's going to move Shopify. You got Toyota. So Sterling, I don't know if you own Toyota stock or not, but Toyota. Wednesday, you got the Robinhood with the Wells notice. You got Airbnb. Oh, you got AMC. Well, there you go. That's important. You got the fake meat company. You got Roblox. Can somebody tell me what Roblox does? Please help me understand. Let's see. You got Warner Brothers Discovery. Again, nothing that's going to rock the market. And Friday is, I don't know. There's just nothing. So we got that out of the way. There's no significant earnings. We have no significant news. So let's just get to the heat map. You got a green Monday. Besides Apple with Warren selling his stake in Apple. That's really it. Groups, you got everything's positive today going into the opening. Let me do a quick read. Yeah, everything's still positive. It's a very green Monday. Fed watch tool still his first cut back to September and then a second cut in December. So 2 cuts possibly priced in this year. Still in fear. Could be interesting to see because if this bounces to neutral, it probably means we close above that 62.5. By the way, I'm on a Ninja Trader today at 10:30 Eastern time. So if you want to tune in for that, I know Anissa tunes in for that. I haven't seen Anissa yet. Did I? I didn't see her yet, but I'll be on Ninja today. Hey, Christoph. How you doing? CEO wants to hire these protesters that are shutting down universities. That's real smart. That's a great way to grow your business. Besides even the headline stuff, isn't you want the protesters who demand snacks, the revolutionary snack demanders, and those are the people you're going to have run your business? No, it's not a smart business move unless you want to go out of business. Really? Not smart. By the way, Schiller PE still in nosebleed territory, 34. All right. Well, thank you, Legion Reaver. What else? Can you explain percent beat by percent B? Percent B. I know somebody archived it. You're better to watch somebody has it in Discord. It's still on YouTube, but it's not in the main list. It's hidden. So you can review that. It's a percent B. Why is it percent B? It's based off the Bollinger Bands. So if somebody could get that information to Chris, it'd be helpful. All right. Again, we've got a flagging corrective pattern. Still going to be watching for the next leg down. However, on the bigger perspective, remember, we caught on the rotation zone. We've had a 2 rotation back up. If we close above this 51.95 area, close on the daily basis, that does not mean the longer term correction is over, but it means in the short term, probabilities have shifted back to buy, and it means the rotation zone's held. So what will I be watching for? Then 52.41, then 52.87. 52.41 would take us into potential weekly double top territory, which is fascinating. We got weekly cycles still going up. So at this point, I'd probably be surprised, especially with a very light week with economic stuff, if we did not close above this 51.95. But again, until we do, the probabilities in the short term have still not changed. However, if we get into double top territory, then the week of April 15th low is Massive, because if we went back down below that, we would be below the weekly rotation zone and potentially have set up a massive topping pattern. Just keep that in mind. Okay? Now, from the lows in January, this is the most recent swing. On the weekly basis, we pulled back between the 50 and 62.5. If you come back, if we come back down here and I can grab the correct thing, see the critical line in the sand then is still 45.76. That's the critical longer term. But in the short term, going to be watching to see if we put up a more significant topping pattern. So we're climbing. We're in a flagging channel pattern, 51.95, and that's the major target, especially on a continued rally over the next couple days. The minor target was this 51.75 where we're trading right now. That's also with a series of very key lows. If you look here, when I have a lot of lows lining up there, see we have a low from the 11th of April, the low from the 10th. We have a low from the 12th of March and a couple low dip buying areas. So this is very key, at least in the short-term resistance. You get above there, there's really not much until this 51.95. Close above 51.95 on the daily basis. 52.41 is my next major level, with a minor level being about 52.10. And remember, you close above this, it shifts the probabilities for, at least on the daily, for higher. Maybe on Ninja I'll get to talk about, I don't know what we're going to talk about, but I'll talk about why, even if you're a day trader, if it comes up, why you should still do your longer term analysis, because, and how I use it in my own stuff if I'm day trading. When I favor buys, sells, or when it's more equal probabilities for buys and sells. Maybe I'll get into that. Again, a lot of this, I'll start assembling the next course too. Sort of the final course. The key, you can see here, the key support, the very key support area is about 51.50. So on a pullback, major supports at 51.50, there's a significant level right here, 51.57.50. But anything between 51.57.50 and about 51.48.50 is a very strong support zone. So if we go into a choppy back and forth, that's my very strong support zone. All right. So if I lay it out, my two critical areas are 51.57.50 to 51.48 for key support. We start dropping back below there, gets a little interesting. The next major level is then back at 51.21. We break above where we're trading this 51.75 area, 51.95. Let's take a look at the NASDAQ. Again, flagging channel pattern. The key area on the NASDAQ is 18.110. 18.110.50 to be technical. So if you just remember 18.111, 18.111, you get above that on the closing basis. This is also, or against the, if you zoom in here, or against a major breakdown level, this black line where we're trading against pre-market this morning. So this is very key resistance, about 18,076 to 18,111. A close above 18,111. We have a minor level right around 18,185, and then majors 18,310. Same thing here. Now this closed below the rotation zone, so this technically went to neutral mode on the weekly, but the weekly gets back above this 18,111, is back into buy mode in the short term. And then I'd watch for that with the weekly cycle still heading up. I'd watch for this to set up a higher time frame potential double top. Again, we could stay with this rotation, be in buy mode on the short term, buy mode on the weekly still, and theoretically go to new highs because the trend will then still be up. Especially on the S&P, remember, we didn't even close below the rotation zone. And I put more weight on the S&P. So the S&P never got out of, even weekly, never went to neutral mode. So on the short term, very key area is 18,000. On any pullback, 18,000 is massively important on any pullback. That's your key number. And then below that is 17,900, 17,911 is your next key level to the downside. See, we still here? It's quiet in the chat. And remember, still a flagging channel pattern. The Dow, this did not qualify as a double. You see, it didn't get below 75, so you cannot use those levels. Instead, 39,272, this is where I'll just use the retracement harmonics. 39,272, 39,634 are the next levels I will be keying off of. Key supports coming in at 39,750. The Russell, again, coming up here Friday. What was the exact high on Friday? 2070. We have the 62.5 at 2069.6, so just 2070. Closing above 2070. Okay, remember the Russell came all the way down to 200 on the daily and is now correcting, but a close above 2070. We'll just go with 2070. Next target's 2100 to take us into potential double top territory, although it's going to be a little icky. And then 2131. But we're getting a lot of potential. Again, they may not ever trigger. We could continue to march higher with election year. Election year, mid-May, we're getting into the window. Generally, with this cycle, with the presidential election, second-term presidential election, generally it's strong from May into, the October timeframe. September, at least. It's generally strong based off of past election cycles. That does not have to necessarily play out. Okay? It's just something I will keep in the back of my mind. And I'd rather use the short-term probabilities. But if you're following election cycle patterns, it's technically stronger. Not all the time. It's not a guarantee. It's not something that just says, I'm going to just buy it in May and hope everything goes smoothly. Now, that's key resistance. Key support is still coming in at about 2027. The VIX dropping back into no fear territory. A slight little gap up today, but we start getting back below about 1375. This week, there's very little. Now, unless Fed speak says something shocking, it'll be interesting to see if we get back to 13s or even the upper 12s with the VIX if we continue the slow grind higher. The DAX, the key level is still 18,377 on the closing basis. 18,351, 18,685. Notes, the major level, remember, the notes on the weekly basis. We are against the rotation zone, but the major breakdown level on the weekly basis is right around 109.24. It's going to be interesting, even that. We're still in potential rollover. The only thing that then changes it, the only thing that really would trigger something longer term is that close above 113.12. That's a long way off. I'm still going to be watching for the next rollover play in this. And look at that. Remember, I just moved that black line on the weekly. You see right here, this 109.24. Look where the 200 is. 109.24. It's right there. The yield, little pullback here. Major support coming in about 435. Speaking of percent B buys, now this might not trigger this week, and we could get the rollover in the daily rotation zone, but we might be setting up if we, geez, hold on one second. Hold on. I keep getting texted, and it's annoying me, so I just got to, there we go. There we go. All right, so that's where that sits. I'll be watching, see how that sets up tomorrow with, we had to come down to that 50 area on Friday, but that would be for a short-term bounce play only. Dollar index, remember, we triggered the double top back on last Thursday. Last Friday, coming down to first and second targets. Is there a buy pattern in this yet? No, but we've already hit first and second targets. 104 is about the final target for that. Crude, remember, if we start breaking below about 77.70, very key level is this 75.20. 75.20 on a closing basis. 75 could be a little minor magnet price, but 75.20 because it's definitely held that for a forever. I mean, look at this weekly 200. So if it pulls back there, I'll be watching for a very strong buy pattern. In the short term, there's nothing much, and major resistance at 80.25. So any bounce play at 80.25 with the rotation zone headed down, I'd then watch for another rotation back down at this point. Gold, hitting the first target on the channeling double on Friday, and a little bounce up. But from a longer-term perspective, we still have cycles heading down. We caught on the weekly rotation zone, so I'm still watching for a stronger bottoming pattern. But right now, it still favors continued pullback. What's my 12-month to 18-month? Well, in the short term, on which yields? Because, again, there's lots of different yields. In the short term, I'm watching still higher for longer on yields. Then I'm looking for yields to pull back, especially starting next year in the longer-term yields. Silver, there's just not some great setups here just yet. I'm going to be patient on silver. 10-year Japan, as long as it keeps holding this 151.65 area, this is, again, the intervention territory. We'll be watching, though, for at least a stall. There's not anything great going on in the yen just yet. So anything would be a minor bounce. The euro, remember, it completed its double pattern. Could not sustain above this 107, really 108 level. But if it does rally above there, the next major is 108.70. Some of these currencies don't have a lot of great setups just yet. The good old Bitcoin, watching for another rollover play in that because of the probability shifted to down, but that's it in the short term. The spiders and the Qs. Your key level on the spiders, 513, what's the 513.08. Let's go 513.10. You got to close above there, which we're trading above there pre-market. That triggers the spiders into continued recovery mode. 516.92 and 520.77. Major support is right at Friday's low, is a very significant area. 508.55. The low from Friday is 508.56, so right around there. So as long as that's not broken, that is the major support level, and it's really 508.56 to about 509.24 is my major support zone. A close below Friday's low would make me sit up and take notice. Why? Because we have the daily cycles heading up and the weekly cycles heading up, and that's a very key level. The Qs, the key closing area. Let's take this off for right now. You see the Qs on Friday. This was the 62.5, this 435.85 area. Did not quite close above it on Friday, so that's still key today. If it closed above there, 440.27, then 444.81 are the next key major targets higher, with a very significant support level right around 432.75. Minor support would be the gap fill to Friday's close, 435.48. Could I take a few minutes about how traders can build confidence? I've noticed that without the proper amount of confidence, you will not take trades you should, which leads to regret and losers. Well, that's why I do so much research. Because, again, this is why, again, research and doing things consistently over time. For the people who followed me for years, so occasionally I'll show some new nuance, but what is the core stuff I continually look at day in and day out? Why do I do that? Because I'm confident. Is it right 100%? No. That's the key thing. People who expect trading to always be right, that's where their confidence is shaken. Especially, look, you can get even with high probabilities in your favor, you can get a string of losers. It just happens. It happens. You gotta learn to build the confidence by trusting the probabilities in the long term, and then you trade with the probabilities and don't have the expectation that every trade's going to work out. And then it's just doing the consistent thing over and over again, no matter what your gut or what your fear and greed emotions tell you is very different than trusting the probabilities. And I recommend people trade that's why I love the micro contracts for futures, because you can trade really, really small. And you can learn that, okay, fine, I might not think this setup's going to work, but if I've done my research and I trust the probabilities and I'm not trading big, then it really doesn't matter. I mean, if you can't afford losses on a micro contract, you probably shouldn't be trading. And consider it's like tuition to the market. That's why trading very small is fantastic, because you're going to pay your dues one way or another. You might as well trade small and learn and build your confidence that way. And the best way to get through a series of losing trades is to get through a series of losing trades. You keep trading. You got to keep trading. But if you don't have confidence in if you don't even have confidence in your setups, then that's the first thing. It's why I define everything in a trading plan. Because if you can't write it down and consistently do it, then you don't have setups that you can rely on. If you're changing what you're doing day in and day out, you don't have anything you can rely on. And then it just takes time. And the best way to do it is trade small. It doesn't matter. You shouldn't even be worried about the money. Trade small. And if you're worried about the money and you say, I can't even afford to trade one micro contract, then you're not ready to trade yet. Because you're going to pay your dues. But it doesn't matter. I mean, look, you're better to trade really small, even if you lose some money. That's fine because that's going to help build your confidence. You're going to learn what you're doing right, what you're doing wrong, day in and day out. Day in and day out. And learning to trade with the probabilities. And also, when you have something in the game, it makes a big difference. It makes a huge difference because your brain is now really anchored to, all right, when you go back and review stuff, did I trade with the trend in whatever time frame you're going with? Especially, did I trade with the longer term trend? Or am I trying to constantly trade counter trend? Am I using stops that make sense? Am I using targets that make sense? Because when you have something in the game, you go back and review it and say, yeah, okay, look, I got scared out of that trade. My target was, all right, like for this, the Qs. We close above this 435 or even intraday. We start just running. I already have my next target, 440.27. Okay? So I'm not gonna. That does not mean. Let's say we're running. Let's say we close above this level and then we don't hit that 440.27. That's going to be a next key target and then 444.81. But if I then start saying, oh, I'm watching a 5-minute chart and I get scared out at 438.45 when my target was 440.27, if I'm constantly doing that, then I'm not trusting the levels. I'm not trusting the probabilities. I got to go back and take notice of that. If I'm cutting winners short and letting losers run, that's the exact opposite. But the only way you're going to know this is by taking action and doing it repeatedly and then figuring out what you're doing right and what you're doing wrong. It's not easy. And people that make it seem easy, you have to have something you have confidence in. You have to have setups and levels you have confidence in. And most people don't put the time in right there to get setups and levels that they have confidence in. And then you're still fighting the most people don't like to lose anything. And they think a loser is bad. But in trading, look, loser's not bad. It's just a setup that if you have, let's say you have a setup that's 70% probability, you're going to get losers. You're not going to just, it's not always going to be 3 out of 10. You might have 10 losers in a row, but then you could have, a lot more winners in a row. You could have 17 winners in a row. And if you look at the macro, it worked out in the probabilities. But people want to say, it's so ingrained that I can't take a lot. I'm wrong. That people take it personally. Trading is not personal, it's probabilities. Just like a coin flip, there's probabilities, but it doesn't mean you can't flip the coin and have it come up 10 tails in a row, even though it's 50-50 each flip. You can get a series. You can get a series. Go watch roulette wheels in Vegas or wherever your local casino is. I mean, you'll see a lot of little clusters of 2, 3 in a row, 2, 3 in a row, but you'll see more often than you think that, there's been 8 blacks in a row or 8 reds in a row. Even though it's 50-50 each spin. So you got to learn to look at stuff that way. I had to size down the micro last 10 days, 100% confidence this week because I'm back to 1 minute when I'm with the minis, I get to trade less. Okay, I'm on my 3rd funded account from Apex, and it's at the point where I can pass evals pretty consistently, but yet make a payout. I think when I get the payout, it will build more confidence in the process. Well, as you should already, if you can pass the evals pretty consistently, now it's just taking it to the next level. You're in the minors. You've proven you can do your stuff. Now it's going to just be consistent over time. And you have to look what has hurt you in the past. Is there something you can identify, you know, that you're doing once you're out of eval mode? All right, so again, in the little short term, we broke up, retested a level, and now marching a slightly higher. Again, there's nothing else besides Fed speak today. If we look at the tick, strong tick opening. Not as strong as Friday, but strong tick opening. And already you've got the pullback in the market trying to grind higher. So, in the short term, keep an eye at 5177. 5177 is going to be key, and then 5173. You know, it's trading is really, it's not easy, and people will portray it as easy. It's contradictory to human psychology and human nature. And again, the way to get confidence is to be here day in and day out and do it over and over again. That's the way to. You want to get good in the long term, you got to be in your seat every day for the long term. That doesn't mean you have to be in it 8 or 10 hours a day. You have to be consistent in what you're doing. Whatever your time frame is, whatever your methodology is, be consistent. I think social media has people believe that they don't make 100,000 in 6 months, they suck. You know you're going to make 100,000 in 6 months? Either you're starting with a really big account and you only have 100,000 left. Now, here's the worst thing is, the absolute worst thing is for people to make a lot of money in trading in the beginning, because it generally means they gambled. And gambling is not conducive to long-term results. Remember, you're going to hear about, let's say you have 100 people and they all started with 10,000 bucks. After 6 months, you might have a guy who, out of just, it might not even be any skill, just being over leveraging and hitting a series of winners, which can easily be done. Out of 100 people, you might have one guy who did it. One guy, 10 grand to 100. You know what? You had 90% of those people, though, their 10 grand accounts now zero. And then you have, I'd rather see the people that did the right thing. You know what? Maybe you have 8 people that, hey, that 10 grand accounts maybe between 9 and 11,000, and they've sat there for 6 months working at it. And they're looking at that guy who's, what did you do? You made 100,000. Well, you know what? Most of the guys blow out at some point because what got them there is not sustainable in the long term. That's why I hate a lot of these trading challenges, even the live ones where people can put up $1,000. Let's say $1,000 isn't going to change your lifestyle. I see people put up $1,000 in live trading challenges and take a boatload of leverage. Why are they taking a boatload of leverage? They want to win. So let's say they take a boatload of leverage and happen to hit a number of trades correctly, which can happen. Oh, I made in the last 30 days, I got a 300% return. Do you think that's consistent? Do you think that's good long term? No, it's because somebody took a lot of leverage and happened to hit a series of accounts, a series of trades. Okay, consistently turning 10,000 to 100,000 in 6 months is not consistently realistic. Slow and steady wins the race. Gambling does not. Over leverage does not. But people, you'll see the one guy touted, oh, this guy used my system and turned 10 grand into 100 grand. Yeah, but that was 1 out of 100. And his behavior is not long-term gonna take him there. He could take that 100,000, turn it back into zero in the next 6 months. But you won't hear about that. You won't hear about that. I mean, I've seen trading challenges where even a 6 month trading challenge, rate of return 465% in 6 months. That's not sustainable. And if you're doing that, you are leveraging the crap out of it. But you don't hear a bunch of people that leverage the crap out of it and blew out. You see the guy who won. You don't see the 99% of everybody who over leveraged and blew up. You don't see all the people that struck out. You might see the person who hit a bunch of home runs, but you're not focused on all the people who got up there and struck out every time and didn't make it to the majors. So that's all I have to say with that. With that, you got to consistently do it. You got to build up the confidence. You got to trade small. This is a long-term game. We all have. You've had other careers. I know a bunch of people have other careers. So you didn't get good at what you're doing in your other career in a month or two. If you know what, you didn't become, even if you're a plumber, you didn't become a master plumber or a master electrician in a month or two. It's what you get in the circumstances. You see, oh, this is a new circumstance. This is something I might have not seen before. It takes time. It takes consistent doing it. You think you're going to master anything in a month or two or even 6 months? That's why it takes time. It takes repeatedly getting in, doing the right thing over time. Then you get more confidence in everything. Can I talk about how small profits add up over time so that one big loss doesn't wipe out that many days as small winners? Well, small profits do add up, but if you're taking, you have to then really avoid the large losses because, I mean, the old adage is correct. Cut your losses short, let your winners run. Personally, I'd rather see a lot of people want a lot of winners. And they try to find those systems that I want 95% winners or something else, but then you're taking profits off the table consistently, and one big loss can wipe you out. I'm from the mindset you want to let your winners try to run, even if, all right, for example, crude. Remember this? Percent B buy, ran up here, and I said, worst case now, stop, break even, came back down, hit stop, break even. Then it stalled out, but it looked like, oh man, I missed out, then boom. I don't mind getting stops to break even because, all right, did it hit the target area? Did this one hit the target area? It got to that 50% after it hit remember the target area I said from that percent B buy was before 84.17 to 85.03. It stopped it out at break even before it got the day after it stopped out at break even. It hit the minimum target area. Oh well, there's always another trade. But if I'm constantly saying, okay, oh, my first target is 84.17, but oh wait, I'm going to bump it down to 83.40. That's where the small wins. Fine, but I'm constantly cheating myself, and then a loss can wipe out of lots of those small wins. That's why I'm a stickler for setting the levels, getting things to break even, and then let it run. And then that's why I also stress why you see the charts. There's multiple levels on them. For example, 51.95. That's key. Until we get a close above that, that's a very key level. That's a very key target. Now, if there was a buy from a lot lower, let's say this is a longer term swing trade, that's going to be, if it can't get above here and we roll over, that's going to be a great way to raise a stop more aggressively. If we can, it's let it keep running. And the next target area is around 52.40, 52.41. And then you trail. Remember, trailing is also excellent idea. Learn to trail very well. If you want to practice something, that's why I have multiple targets. Learn to trail. And at that target either means I can take partial profits, which is hard to do with if you're only trading a one micro lot because you're all in or all out. But once you can graduate to like 2 micros, you can at least have the luxury of taking half off and letting the other half run. And then you learn to trail. Which is why once you get good, I always recommend people trade with multiple contracts, which is why the micros are so great, because I'd rather have somebody trade 10 micros than 1 mini. Because 10 micros give you the ability to get out at a couple different levels and then continue to let something run. Versus 1 mini, you're in or out. And when you're in or out, trading gets a lot harder. I don't know. I hope that helped. So that's where, that's another thing. Back to the build confidence. I think trading it with multiple, once you can get to even trading 2 micros, 3 micros, you can then let something run. Especially when you're trading with the trend. You can let something run. And you're never going to call the highs or the lows. You might get lucky at times, but you're not going to consistently top ticket or bottom ticket. The whole thing is to learn to trail. And then, it's why I also point out potential double tops, potential double bottoms. So let's go with a potential double top. Let's say you're trading, and this is in the short term, and it comes up here, and we set up a potential double top against that 51.95 level. Well, the base of that potential double top would be a great trailing level. I'm not trying to say, okay, well, it didn't close above 51.95, it's got a reverse. No, but if I'm coming up here and it's struggling to close above there and I get a pattern, I know where my last trailing level is. Because if that were to trigger a double top and can't get above the 51.95 level, at least I have a consistent pattern to rely on. But I don't want to exit because that reversal pattern might never trigger. It might just base here at that 51.95, then eventually close above it, and then be off to races again to the upside. So you'll see me identify potential patterns, and many of them don't trigger. That way, I have, and you'll hear me, I've said this before, and I've said this, we got a potential double top. That could be a great level for a longer term stop if you're trailing. And until it triggers, the trend's still the other way. The trend's still up. And a double top may never trigger. It may just remain in potential mode and then become invalidated because the trend's up. But now you have a really good area to trail out your final contract. All right, just like here, the trend now we're in the possible reversal pattern. But does that mean we have to reverse in here? No. We still have the probabilities in neutral, but my probabilities shift about 51.95 on a daily closing basis for longer, for higher. That could even mean we go up and break above the highs from April 1st. All right, Charles, you're welcome. You're welcome, Heinrich. In Top Step, we have these horror stories. A guy made 50,000 one session, end up at minus 3K. Yeah. Again, that's not consistent behavior, because If you ended up at 50 and then it went drop to minus 3K, are you doing something right? No. If you were doing something right, you would not have those big swings. It's just consistent behavior. But those, the big wins are exciting, but the big losses aren't. So I'd rather do something consistent. And just remember, even if you're trading the 1 minute, look, if we get the close above 51.95, I'm going to be even if I was trading a 1 minute chart, what's day in and day out, I'm going to be focused more on buys and sells. Okay? Why? Because the probabilities have now shifted to back up. So if I'm constantly focusing on sells when the probabilities have shifted to up, I'm now swimming against the current. Whereas now it's sort of neutral mode. I can focus on buys and sells. And before, as we were rolling over, it was focused more on sells. So that's how you can use the longer term to help guide you in the shorter term. The mini NASDAQ. Have you ever surveyed chat whether most trade mini or micro, or mini or micro NASDAQ? No, I haven't. Personally, I prefer the S&P, the S&P over the NASDAQ. The patterns are slightly more reliable. You get more whipsaws and more overreactions to the thing in the NASDAQ. Does not mean the NASDAQ's not tradable. It just means if I had to pick between one or the other, I like the pattern. Now, sometimes the NASDAQ triggers a great pattern that the S&P didn't trigger. Hey, that's why you have flexibility of trading multiple markets. But if everything being equal, let's say I had a double bottom in the S&P and a double bottom in the NASDAQ, I'm going to focus on the S&P. Because I don't want to have, we may have double bottoms triggering the S&P, the NASDAQ, the Dow, and the Russell. I'm not taking all my money and putting it into 4 trades that are all correlated. That's why we look at a bunch of different markets too. Because a double bottom in crude might trigger the same time a double bottom does in the S&P, but they're not highly correlated markets. All right, I've got to run and get set up for Ninja. So if anybody wants to join me on there, that's where I'll be. We can talk about that, Martinez. Bring that up with me tomorrow. I got to run, guys. I stayed around another 30 minutes. And I will talk to everyone tomorrow. If you have more questions, just bring them back tomorrow. Talk to everyone later. Bye for now.